market is likely to go next, and well, how we're likely to get there. We then want to decide how are we going to approach the trade, how can we potentially enter, and then of course E, execute. That's click the button, pull the trigger, execute the trade. Now we're probably going to only be able to do half of that today, the I and the P part, identify and predict, just because we still don't have a real good feel of the market. But those two starting points are the most important part of your analysis. Once you identify and predict, you have a game plan. You know what you're waiting for, what you're expecting the market to do, and you can spend the rest of your efforts going through your trading plan and looking at your rules of engagement for how you can actually attack the trade. So we're here on the 4-hour chart of euro dollar, and overall we're just in a period of consolidation. You can see if a good rule of thumb, if you want to identify a bearish trend, price action should be going from the upper left hand of your screen to the bottom right half of your screen. If you're in a bullish trend, price action should look like it's going from the bottom left of your screen to the upper right corner of your screen. If you're in consolidation, sideways movement, well, you're going to see a chart like you see ahead of you. It's just literally going sideways. So we're not in any overall trend here on the euro dollar. But you can see that our most recent move was this. Our most recent move is we came down from previous structure highs. Let me just change this to an arrow. Here we go. Previous structure highs, we came up, we put in a nice long period of consolidation. We followed that up by breaking up to the high side, retesting our consolidation pattern, and now if we zoom in, we've got a nice little ebb and flow looking like this. Boom, swing low to swing high. We've got an outside return, testing previous structure, looking left, look left, structure leaves clues, and today's movement has given us a higher high, higher close. You can see we have a higher high, higher close over our previous structure highs. And if you guys are new to analyzing a price chart, one thing I recommend doing after this video is over is heading to our website, www.tradeempowered.com. Click the Learn to Trade tab at the very top, and make sure you watch a free training video called Into the Gray. It's about a 2-hour workshop that Jason Stapleton did, talking about how to read a price chart, talking about OODA loop theory, basically some of the basics, of charting and reading price action. So, going back to our IPDE, we have identified that price action has broken and closed above our previous level of structure. Higher high, higher close causes us to think what, traders? Yep, continuation to the bullish side. So my next anticipation is that we are going to come up here and test our previous structure highs right around this 113, even 113.50 level. And again, for you guys that have our DSR indicator that want a better, let's say, visual representation of structure, you can go ahead and throw that DSR indicator on. I have it based off the daily chart. So these red boxes are showing me important structure levels based off of the daily time frame, which is my higher time frame for this particular setup. So if we're anticipating, we identify where price action's at. We want to predict where price action is likely to go next. And I already told you, look left, structure leaves clues. Structure acts like a magnet. I would expect that price action is going to continue up into our DSR level up here, our next level of resistance. Now, the question that we want to go along with that is not only where is price action likely to go, but how is price action likely to get there? And there are two ways to get there. We can just go straight up, not really providing us any opportunity to the bullish side, only providing counter trend traders a short opportunity up here, or we can retrace. So when the market does something like this, a retracement before heading up to this structure level. So if, and again, we never know what's going to happen. None of us do. The market does what it wants when it wants to do it. Now, there's no way I can come here and tell you guys the market will do this. The market has to do that. The market must do this. If any trader ever tells you that, then they're just lying to you, because we never know. All we can do is make the best predictions. And so the prediction that I would make for this particular opportunity is that if we get a retracement back in the previous structure, between there. I'm not a trend following trader, so I won't be keeping my full position all the way up here, but just a general thought process of how the market moves and how it's likely to get there. So what I'll be looking for, I guess starting with tomorrow, heading over to next week, is a retracement back into our previous structure level. Now, how far is this market likely to retrace? That I do not know yet. Because of this wick down here, we could retrace technically anywhere in this zone. So this is certainly an opportunity where I'm going to gear more towards the conservative side instead of the aggressive side. There are certain trades like the Aussie Canada, the Aussie dollar trade I showed you guys yesterday, or showed you, I don't know if I showed you guys in the live room, where you can be very aggressive because you have structure as your friend. In this opportunity, not so much. If I were to enter aggressive, let's say right here, the only safe place to put my stops would be down here. And I'll tell you what, guys, that's a little too far for my liking, so I'm definitely going to have to look for a conservative way for entry. But the point I want to make in this video is just what we're looking for. The first two parts: identify and predict. Where are we likely to go next? There's also a 2618 opportunity in here. If we look at this as being a double bottom, for you guys that are familiar with our 2618 technique, if we take our Fibonacci retracement from our swing low to our swing high here, and again, if price action continues up, we'll have to adjust this accordingly. You can look for a test back to your 618 Fibonacci retracement. Anywhere in this zone is where your 2618 trade is going to be, could potentially be completed. And then look for that same bounce, retesting previous structure highs and expanding to the high side. So again, I know some of you are going to be upset. You didn't give me a specific point where I should enter the market. Should I get in at 110 even? Where do I buy? Where do I sell? And that's not the point I want to get across in this video, because right now it's just too early to tell. It's too early to tell where the buying opportunity, or even if the buying opportunity, is going to come into play. What I can tell you is this is what I'll be looking for: a retracement back into previous structure. And as we get into the structure level, I'll be going down to my lower time frames and looking to build a case for entry in anticipation that the market is going to continue to the high side, retesting 111.50s and potentially going all the way up to that 113 level. So that's just a taste of how we do our analysis each and every day in the live room, in the syndicate. And if you like that sort of stuff, guys, we have a free trial for our live room. We have a $1 trial for our syndicate program. Feel free to come in and hang out. I am going to post a short rant from my live room at the end of this video. So for you guys that like those type of stuff, it's not a mean one, don't worry. But for you guys that like that type of stuff, you can come over and check it out. If not, I'll see you guys next week. Check out my periscopes. They're underneath this YouTube page. I've been doing a lot of them. You people have been enjoying it. They've been in random locations, which I think is nice. And I try to answer a question each day. One was on mental toughness. One was on the pros and cons of trailing targets and trailing stops. Another one was on organic versus self-made drawdowns. And it's just fun little live videos where I can answer Q&A. So I'll see you guys next time. Until then, plan your trade your plan. Be safe out there, and good luck in the markets going forward. You throw some real money in, then everything blows up in your face. You're like, whoa, what's wrong? How did it happen? And then you go back to square one, and you're like, okay, I'm going to do it real. I'm doing it for real this time. Demo trading for 6 months. All right, 6 months of demo trading. I'm going to get used to this, and then I'll be really ready when I put live money in. Right, and you go back, you demo trade, you get your first weekend, it's good, you're like, this is great, good start. Second week is positive, third week is maybe break even, fourth week is positive, you get your numbers, you crunch them up, right? And you're like, oh man, I'm up 300% again, 99% win percentage. Man, forget these 6 months, I'm going live now. You go live and blows up in your face, right? Repeat process over and over.